Bro, so tell me something that you haven't told anyone yet.
We're building something I consider pretty unique. So one thing I think centralized exchanges always got right was they were like blockchain wrappers, right? You know, you can't tell you're using a blockchain. You have this giant USD balance, and you can just trade across all of them. Well, we figured out we haven't launched it yet. We won't launch it for a little bit, but we figured out effectively how to have a giant USD balance that can live across effectively every chain, let you trade anything without needing to bridge, without needing to go and get gas tokens, without needing to, none of that. So yeah, trying to close the UX gap, so to speak.
More.
A giant USD balance where you can trade any asset across any chain without bridging, and it has yield. But I'll leave it there. Yeah.
What's the worth of one Azura point?
We'll let the markets decide. I
just wanted to let you know, jail's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
GM, welcome back to More Than Speculation. Today's episode, we have Jackson Denka from Azura. So right off the bat, this guy was a former filmmaker that now wants to build a new Wall Street. So that's the context that you would have to know. I think the hair speaks for itself, so I'll pass it on to you, Lambro.
Let's start with like rapid questions, shall we? Tech, community, or token price?
Tech community or token price?
Yes.
Tech community.
Okay. Fundamental, narrative, or sustainability?
I feel like fundamental and sustainability are about the same, right? If something's fundamentally sound, it's sustainable, usually.
Okay. We can go more on this actually after. DEX or sex trading?
DEX, no question.
Okay. Are fees really sustainable? Is fees really a sustainable thing in crypto?
Fees? What kinds of fees?
Just overall. I don't personally. I don't think there has been a sustainable fee in crypto.
I mean, all of finance is built on middlemen and fee services. I feel like if you cut down a few of them, fees are still sustainable.
Where are we in the cycle right now?
I don't know. It didn't feel like a bull market, to be honest, but I think this is going to be like a COVID style crash. We got like 3 months of pain and then it'll correct itself. That's what I think.
I think we're in 50% pain. But yeah. Okay. Thanks for that. How about this? Before we start, maybe you can do a quick intro about your product. We can dive into more detail afterwards. It's more like warm-up session for people that don't know your product right now. That would be great.
Yeah. Azura is an on-chain trading platform. The idea was to lend the same sort of user experience you might have on a traditional fintech or centralized exchange while being able to access, DEXs and other sorts of on-chain liquidity and assets. But yeah, that's the high level.
Okay, nice. So as a user, do I connect my wallet and then deposit into an account? Or is it more like I connect my Rabby and then whatever money I have in my Rabby, it will just directly swap, perk, all those kind of stuff?
No, I have a bit of a controversial take on this. I don't think wallets in the current form factor are going to scale. I think they remain too unopinionated of software. There's not enough guardrails in place. And the other thing I have to ask is if they were the thing, then why haven't they? Right? Like if they were going to onboard everyone to on-chain, why haven't they? And I don't think the answer lies in making infrastructure faster, but we can keep doing that, I guess, for now.
I agree with your point. It's just that I want to make some money in the meanwhile, so I still do wallets. It's like, who would have thought App Store and mobile was the thing before before a smartphone came out, right? Like the form factor and everything would change one turn. But okay, back to your product. So how do people actually use your product right now? Like how does it work, and what's the user journey or starting point like?
Yeah, you can sign up with like Google and Apple and or email. You can deposit money to it. Again, it's like a centralized exchange flow. You can on ramp with a credit card. You can send money directly. Connect a wallet to send money, but you don't need to bring a wallet. Once you have your money, Ethereum or other native gas tokens, or stable coins, and you can go and trade other types of assets. That's pretty much the long story short. But yeah.
Nice. I'll do a video click through of the website later on and add it in the podcast. So what you can do spot, leverage. Do you have anything on top of that, like maybe options or those kind of, or it's just mainly spot?
No, strictly spot for now. Strictly spot for now.
Nice.
Cross-chain spot,
The
right?
liquidity.
Yeah.
Yeah, the liquidity it's based on integration or intent network or your own liquidity book or something like that.
Yeah, none of our own liquidity. It's a mix of intents and what protocols offer themselves. So all third-party liquidity.
Okay,
So like
few.
I want to take a step back. It's okay. I want to take a step back. You said that you managed a fund with an AUM of 700K. I guess. Like, what was the craziest story from that, and how did that start your founder journey? I guess.
Yeah, I managed that for friends and family when I was in high school. I the funniest story was I managed it through COVID, which was not a good time to be managing money. I didn't take management fees either, so there was no upside for me. It was just nothing but downside, right? So if I fucked up and lost their money, then I'm just screwed, right? And if I make money for them, then I don't get any of the money. So yeah, managing it through COVID was terrible. That was really scary. And then obviously, then QE took in and everything went back to normal. But yeah, no, the scariest bet I did was I kept buying all the way down. And I think it eventually turned out positive after 9 months. I think it was July or August was the bottom or whatever. And then for, the last several years, it's gone straight up. But yeah. And in regards to the founder journey, I don't know. I got used to pain. That was good. Pain and stress, but no, I don't think it was terribly relevant. At least not as a. Yeah, I wouldn't say so.
Got it.
But yeah, what motivated you to build this trading terminal? Would you call that a trading terminal? How do you categorize it actually?
Yeah, I just refer to it as a trading platform. Sorry, my camera just bipped out. But I think my whole idea, my whole thought process with this is I do remain largely convinced, and no matter what people may say, obviously within crypto we take this at face value, but on-chain is the new financial technology standard. There is no question about it. It will become the new financial technology standard, and as money migrates on-chain and as assets migrate on-chain, the people that stand to benefit the most are those that build platforms where the future money may reside. That was sort of the super high level, but obviously in regards to the specific problem set, I don't think that centralized exchanges and traditional fintechs are going to be the thing forever. I think the fact that a lot of these things are blocked by jurisdiction, the fact that asset selection is pretty limited, and the fact that on-chain sort of enables for finance what the internet enabled for information, that anyone can contribute to it. There's no way that things like listing mechanisms, for instance, can keep up with, say, hypothetically, if sometime in the future there's a social media site where every post is tokenized and every it's an investment in that post. How would you list all those? You won't. It's not going to happen. So I think the way we think about finance needs to be completely flipped on its head, and on-chain is going to be the thing to do that. And luckily, it's so weird that legacy incumbents are not going to catch up easily. So, yeah, that's the long story short. Yeah,
I agree to a certain extent. I think it's going to be a bit like eBay and Amazon, in the sense where you have it will be a mix. I think it will be 40-60% mix kind of thing, where people will still trade on centralized exchange for efficiency, higher margin, etc. But for wider variety of things, people will do on DEX. And I think that's, and then depending on the market cycle, do people want to trade major assets or alt assets? It will see where the volume goes through, in my opinion.
Maybe. I mean, that's kind of how it is today, though, right?
Yes.
Like that's exactly what it is today. So the way I see it is like if on-chain can reach parity with traditional fintechs and centralized exchanges, then why wouldn't it be the thing? Like that's the question I ask people is like, why wouldn't it? And I was just, I was saying that like there's a funny counter that people make to crypto and blockchains. It's like, oh, why does it need to be on a blockchain? I don't know if you guys ever saw there's like some Bill Gates like Tonight Show episode in like 1990 something, and they kept asking, they're like, oh, what's something interesting going on in the internet today? It was like, oh yeah, they put I think it was like a sports episode or some sports game on the internet, and the talk show host was like, well, I can just watch that on my TV, right? Or they went through this a few times. There's like newspapers, radio. It's like, oh, I can just buy a newspaper from the local news. It's the same counter argument people make to crypto. It's like, well, why does it need to be on a blockchain? And I could make that argument, but I think what you said is true today. But as blockchains and especially on-chain tech reaches parity with centralized exchanges, then, or rather off-chain liquidity, then there's really no incentive to use off-chain liquidity beyond the fact that like users and consumers are used to it. But really, like, what do centralized exchanges and other off-chain providers have over DeFi and on-chain? It's access to on and off-ramp rails, depth of liquidity, and then speed and UX. That's it. So if you can solve those things, then that's kind of game. But yeah.
And under collateralized loan. I think that's why.
That's
the only thing that.
Yeah, that was
I
like
think
from the
why
2022
centralized will have it. Yeah, that's the only thing I felt like they have an edge, and like it's like
so wait,
trust score basically. Is it credit
Jackson,
score?
do you kind of see yourself as like competing with CX like right at the bat right now, or that's sort of like that's like the 5-year goal, but I guess like your short term, like at least the way that you see your competitors, like, oh, I'm gonna compete against other cross chain swaps, or like how do you see yourself when you focus your time?
Yeah. There's really the only products I see as like competitive in the near term are trading terminals, and there's only like a few of them on the market right now. There's only a few, and they're like strictly focused on meme coins. We're a little bit more generalized. So I mean, beyond that though, like I don't see a ton of products in this vertical. Like for the longest time, people have neglected apps and people refer to what we do as a front end. Oh, it's a front end. Okay, that we do way too much work for it to just be a front end.
Right.
For instance, the order routing logic is bespoke and from scratch. We built an aggregator from scratch ourselves, as goes like the types of, the information you see on tokens, the data. That's not just from some API. That's built bespoke in-house from scratch. But yeah, I see trading terminals in the near term, but on a 5-year horizon, if we could compete with centralized exchanges, that'd be super cool. Yeah, that would be fantastic.
So I use a lot of trading terminals, but mostly focus on meme coin for a few different features. First, the wallet tracking, monitor sensing, checking of the on-chain liquidity, also some like essentially like Proton innovator on 1 second charts, those kind of things. For non-meme asset, like what is why people would use it? I assume there's additional fees on top of things. Is it because of the better intent network, better route, or charting, auto buy, those kind of features?
Yeah, I don't think it's any one specific feature. I think that the trading stack is extraordinarily fragmented, and it's been fragmented for a while, right? Like,
yes,
this is my app for wallet tracking. Oh, this is my meme coin thing. Oh, this is my aggregate. Oh, this is my wallet. This is my, and it's like a dozen different apps will be strung across. And it's not like these won't consolidate at some point. Like anytime we're early to something, any new technology, like historically, there's a bunch of little products doing a bunch of little specific things, and eventually it consolidates. This always happens with consumer-facing apps. It always consolidates, and will consolidate for trading applications as it has before. But I think between the fact that this aggregator is only in this ecosystem, or this wallet only supports these couple chains, or this trading terminal is only for meme coins, or this other one is this one's more generalized, but it's for DCAing and TWAPing, or it's like it's extraordinarily fragmented. I think I think it's really easy. What's up?
It's like KOLs like me would say like, here are the 5 tools that I use to trade altcoins.
It's just engagement baiting, bro. Yeah.
But yeah, I agree with you. Sorry, I didn't mean to sound like I was questioning like your journey, because like I think Moonshot has proved that you don't actually need a special feature, because you can still like most dApps, right? Most apps, even if you have an interesting user acquisition tool and a user habit, like you don't need differentiation in product actually, which is proven in a lot of like app sector. So okay. What would you say your users profile are like right now? Are they like sophisticated traders? Are they like easy to onboard, or they just they don't know how to use wallets and different chains, but they want to buy all coins that they see on things like?
Yeah. Well, it's definitely not retail. We went out of our way to not target retail. I think retail is like the most fickle user base in crypto, right? They'll flood in overnight when prices are good, and they'll leave immediately, and your app dies.
And they'll cry over a few dollars.
Yeah, exactly. Yeah. They're not a good customer. They're bad. But yeah, no, our focus was not actually meme coin traders. Some people made the mistake of thinking that. We actually focused on people that would otherwise be trading perps on either a centralized venue or like Hyperliquid or something, and wanted to experiment on chain with the same UX. There's this sort of like cohort user where they have a ton of money. Maybe they're not scalping every single day like a meme coin trader, but they're sticky and they know what they're doing, and they don't have a ton of complaints. That was the user base we went for. It was the one I understood best, because that's pretty much what I used to do. What I suspected was the meme coin trade. Like meme coins are probably never going to go away, but that user base felt a little bit too fickle to me. And obviously, like if you can go look at like the metrics of this stuff. It's proven itself to be true.
Very fickle.
Yeah.
Okay. So, all right. Can I be a little bit direct? Are there opportunities in using a terminal compared to other people right now? Let's say I can farm some points. Let's say, because I pay a little bit of fee, there might be some speculation in future.
What are the alphas for the listeners?
Like trigger me to use your app right now, bro.
Yeah. Well, I can. The only thing I can promise is that we're just never gonna go away. We're never going away. We're just no. It's like the number one advice in bear markets for traders is survive. Well, that's the same advice for products. Just keep surviving. And I think that a lot of people building products get frustrated when they don't get rich overnight. They go and do something stupid like pre-PMF launching a token, then just selling all of it. Right, that's how you kill a company. Or winding it down and just taking whatever money's remaining in the treasury and paying people out, and that kills it too. But yeah, we're not going away. That's all I can promise. Yeah.
Nice. I wanted to take the convo a bit towards, I guess, like some of your like personal journey and personal story. We've talked about the products a lot. Like, unless you have more product questions, bro, are we gonna tease him more?
I'm good. I actually want to play with it.
No. Like one super like VC style question. Like, and he makes fun of me for like doing this, but like what I want to ask you is that like you have mentioned before that you're optimizing for the best story to tell as a life philosophy, right? So like I just want you to expand on that. Like, what's the story you're trying to tell with Azura?
Yeah, well, it's not even necessarily about Azura per se. It's just like my philosophy has always been like if your time on this earth is finite, right? Let's assume all major religions are wrong. It's finite. There's no afterlife. There's no second life. Whatever. We just we know what's in front of us. Why not spend that time trying to do as many interesting, unique, and exciting things as possible? Like I don't see a reason why that shouldn't be the case, right? Like I used to know all these people growing up who would they'd optimize their lives for like avoiding discomfort, and that's just fucking boring. So yeah, that's my philosophy. It's like, what's the riskiest and one of the most interesting things I could do to theoretically make the rest of my life great? Oh, I'll go start a company in the weirdest and most overlooked and most like horribly misunderstood sector. And it just so happens that I also really appreciate and love finance, and I took a bunch of Milton Friedman economics courses. So, free markets, free economies, right? So
from the University of Chicago, right?
That's right. Yeah, I didn't stick around too long, but I did learn that.
I think I saw you tweeted something about, or like on your website about like FTX that you ran through the fire or something like that. Like, what's the story there? Like, are we missing some context? Is there like anything that you can share?
Yeah, I mean, it was just there were like two big things I saw after FTX. One was, okay, generally like anytime something bad happens, everyone's like, oh, it's over, crypto's going to zero, and it's never happened, right? So obviously, like I knew that. But the second thing was I had assumed that this marked like the starting pistol for a greater migration of assets to on chain. That like there is. FTX really proved what's so funny with FTX is what they're doing with user funds. You can technically do as a bank, right? Like what is it? Like in like 2023 or something, there was a law passed in
It's
the
like
U.S.
Valley
where
Bank,
banks,
right? Yeah.
yeah, you can have 0% fractional reserve banking with 0% backing. So you could, literally have $0 in cash, and you can legally operate a bank. And you could gamble it on crypto. Well, I don't know if you could gamble on crypto, but you could give out really shitty loans, right? You
Soon.
could buy a bunch of, like in 2008, buy a bunch of, what were they? The terrible housing bonds or mortgage bonds, whatever. Yeah, MBS is mortgage-backed securities. But yeah, so I think that we had SVB and all these other banks blow up. We had FTX blow up. We had Three Arrows Cap. Well, I guess that's a little different, but we had BlockFi. We had Celsius. We had, we have all these different these CeFi products blow up. And it's not that that can't happen in DeFi, but it does mitigate some sort of risk. So my like immediate impression was, yeah, more money will move on chain. That was it. It was more money's going to move on chain, and people are going to take crypto less seriously for like a year or two. So may as well spend time learning it.
I agree.
Yeah.
I agree. I agree like 70% of your approach, all of what you said basically, because like, so I got really wrecked in FTX, right? And then I literally saw, including myself, just use on-chain perks and on-chain swaps for like 1 year ish. Then like the faith kind of slowly come back, and then the cheaper fee, better efficiency, you go back to sex a little bit, but you're still scared. But it's almost like a cycle, right? It's all over, then you go back to your on-chain thing, and then you go for efficiency, then you go higher leverage, back on sex as well. But yeah,
And
there's
then,
definitely.
and then
I
he missed
do believe in
Hyperliquid because of that.
Fuck. It was wrecked, man. Yeah, I silenced that fully. Jesus. Okay,
Got it,
so
got
before
it.
this product, did you try building something else before, or did you explore other thing, or you just be like, I fell in love with this, and this is what I'm going to do?
Yeah, I like tinkered. I tinkered for a while. I did all kinds of random crap, but I in college the only project I'd really ever built prior to this one was it wasn't very impressive. It was a Slack and Discord bot you could query to get the prices of equities or like capital markets data. That was it, because there was no other way to you couldn't query that sort of data in Slack and Discord. It was like $20 a month or whatever I charged. Scaled it to a few $100K in annualized revenue. I was like, oh well, if I could do this in my dorm room, I'm sure I could do something bigger if I leave. So that was it. But no, I didn't.
Nice.
I didn't build a whole
I love
lot of
the
software
bootstrap story.
prior.
Yeah.
Yeah.
Nice.
One question is that, I mean, a lot of people, like I saw a lot of tweets recently saying that like, oh, some builders don't respect traders, or like vice versa. There's like different kind of builders, right? Like for you, like obviously it's different, right? Because you're like, those are your customers. But I guess like, what do you think are like certain edges that you have, like because you were a trader yourself, or at least, yeah, like how would you say that shaped your like product management approach?
Yeah. Well, there's sort of this advice people give and they fail to caveat it, but they say talk to your users and build what they want. Now that is true, but there is like to an extent. There was some tweet I saw a few days ago where it was like, if you exclusively talk to users and do exactly what they want, you build a commodity. If you don't ever talk to users and don't build what they want, you end up with an art project. So there's sort of this like place in between, right? And this was what I saw a lot of like the trading terminals doing, was they spent, I could clearly tell, like they spent way too much time talking to users. That is a real thing. So they became extremely niche, very narrow products. And, once this sort of like initial meme coin, whatever, blows over, then their products are too narrow and not generalized enough. But yeah, I guess my edge is like, I've been trading for so long, both crypto and equities, that I know what the end state of these products looks like. I've used these equities products that have gotten the multi billions, like whether it's like TradingView and or TD Ameritrade's Thinkorswim, or even like something like Robinhood. There are tried and true and classic rules to building trading platforms, no matter what some people may say. So yeah, and I guess also I am a trader. Like I think like a trader. I've stopped trading recently though. It's very emotionally taxing. I have to, I can only do so much at once. Yeah, no, who's better to build for users than the user? At least is the way I see it.
What's your best and worst trade?
Best and worst trait. My best trait is I can contextualize things and I can zoom out. That one's big. I think people have trouble doing that in crypto. They have trouble contextualizing things. They have trouble panning out the camera. They're like stuck in this very like tunnel vision view of the world. My worst trait is I make compulsive product decisions that in the moment will meet a demand very quickly, and then 3 months later we have to like say there's tech debt built up, or something, right? But I've been working on the second one, but yeah.
So this is very funny. You're like answering TRAIT. I'm trying to ask you what's your best trade, TRADE.
Oh, trade.
But it's good.
I think it's good. It's good. It shows you're thinking, and I think
you're thinking like a builder right now. No, but the second question then is like, what's your best and worst trade?
Oh, my best. Okay, I've got a good one for you. I know my worst trade. I was going on a camping trip when I was like, I think I was like 16 or so. I was going to Death Valley in California on this camping trip. And my friend and I were stopped at this Greek restaurant in like Barstow, California, like in the middle of nowhere, right? It's a desert town. And then I read this news headline that an Iraqi drone like blew up some oil well in the Middle East. It was some U.S. oil well. I was like, oh, right. Nice, a war in the Middle East. So the oil prices are going to go up and oil's going to go, supply is going to go down. And I bought a bunch of oil call option, or it was some oil. I don't remember what the exact, something like that. And they were, I didn't know anything about managing risk. And I bought a lot of these things because I saw the headline and like within 30 seconds I reacted to it. It was like maybe like an hour before market close. And then I had no reception on my phone for the weekend. And then we're getting back on that Monday. And I checked my phone and I'm like, I looked at the portfolio. I'm like, why is this down like 90%? What the hell happened? And I looked in the news, and on Sunday they were like, oh no, it was a misfiring. It was, we're not starting a war, everybody. And they were like really close to expiration call options. I lost like $60,000. That was one of my worst trades because it was just stupid. Best trade. I used Hyperliquid in August of 2023, or it was like September, I think, of 2023, maybe. And I remember I was in Alliance at the time, and I told Imran and Chow, I was like, talk to the Hyperliquid guys. This is the next big perp dex. And I think they were busy, but my best trade was using Hyperliquid. To be honest, like ROI wise, but I also bought Occidental Petroleum at like $4. That was pretty good. Way back in like 2020 or something like that. I don't remember.
Wow, you're a while ago. Really like multi-asset trader ever since you were very, very young. That's amazing.
I've traded everything. Everything. CSGO skins, game license keys, crypto. Yeah.
Got it.
Nice. Do you have any questions for us?
Yeah, how did you guys get into crypto respectively?
I'll let you answer that first, man.
I started dabbling around DeFi in the like late 2019, like DeFi summer, and then I somehow got drunk. I was looking at Axie Infinity, thought my girlfriend thought it was cute, stopped buying it. Then I realized that was an arbitrage between the NFT and the tokens. Played that, actually enjoyed it. First time trading that made me feel like there's actual community. Like then I actually built out like mini guild, and then since then I just doubled down on being early in anything new. So like I play with every single narrative, every single DApps, every single new things, and then if I like it, I'll double down on it. Obviously I get wrecked a lot, but I enjoy it. And then from there, like name any Ponzi money game, I probably had some money in it. And then somewhere in between, I say like, fuck it, let's just start writing on Twitter. Got a little bit of traction. and I met Marco, a bullshit VC guy. Then we started doing this.
This guy, yeah. No, but mine's much simpler. 2016, 2017 ICO era. I was in college, but I gave back like 98% of that. But I was in like Icon, One Chain, Walton Chain, all of the OG ICOs. So I just got stuck into the rabbit hole, and I just decided either we're gonna work full time in crypto or be like some like Web2 emerging markets, like finance guy or something. So just continue on, like from then on, and met him.
Yeah, and
Nice.
did you double down the winners? Fucking Marco, yeah. Every time when he doesn't know what to say, he was just say, yeah, the strategy is double down the winner. That's what he always says. Okay. All right, last questions, man. What do you think is required to make it in crypto?
I feel like everybody that's been successful is one of two things. Either they get lucky in a short time period and they know when to sell, whether it's like a company they're building or, you know, an asset they're trading, and that's respectable. And the second thing is just to buy or, you know, invest your time. I mean, it's always capital and time, right? Those are the two things you have.
Right.
And they just put it in the right place and they sit and they wait patiently. That's it. Like that, those are the only two ways. And one of them is consistent. The other is not so consistent. So yeah, I don't know. I'll put it this way. When I was trading a bunch, like a few years ago, I lost all my fucking money being impatient and leveraging and, you know, doing all the stuff everyone else does because they see some other guy get rich and they say, oh, well, you know, I just got to up my risk parameter. Of course, that'll fix everything. And then they lose all their money. So just don't die. Yeah, that's it.
Don't die, indeed. Yeah, that's a good one. Again, thanks for coming to our pod, man.
Yeah, of course. Thanks for having me, guys.